Bitcoin Ordinals are taking off, crypto jobs are on the rise, and James O'Keefe exposes Ethereum. These stories and more on this week's Bitcoin News Update. Hi, I'm Nate Martin with this week's Bitcoin News Update. Bitcoin Ordinals have gained momentum in the last few months, and major institutions are taking notice, particularly Franklin Templeton. In a published report called The Rise of Bitcoin Ordinals, the fund manager pointed to the recent surge in trading volume, highlighted by the December numbers, during which Bitcoin Ordinals surpassed trading volumes for Ethereum-based non-fungibles. The report noted that unlike NFTs on other blockchains, such as Ethereum or Solana, Ordinals contain raw data that is inscribed directly on the Bitcoin blockchain. Meanwhile, Binance announced this week that it would be discontinuing support for trades and deposits of Bitcoin NFTs as of April 18th. Users are advised to withdraw their Bitcoin NFTs from the Binance NFT marketplace through the Bitcoin network before May 18th. Bitcoin had a rough start to the week, falling briefly below $65,000 on Tuesday, highlighted by a more than $2,000 hourly red candle in the early morning hours. Some of the variables leading to the dip include a strong US dollar index, which hit 105 for the first time this year, and higher volatility with anticipation of the Bitcoin halving, when the reward for miners is cut from 6.25 to 3.125 Bitcoins per mined block. The price of Bitcoin recovered later in the week with encouraging signs from the Federal Reserve. Fed Chair Jerome Powell suggested that interest rate cuts would come before the end of this year, saying, quote, "If the economy evolves broadly as we expect, most FOMC participants see it as likely to be appropriate to begin lowering the policy rate at some point this year." The next Federal Open Market Committee meeting is scheduled for next month. The crypto bull run has ignited a surge in job listings and salary increases in the industry. CryptoJobsList.com shows a 20 to 30% increase in the number of companies hiring month over month since December. CEO Raman Shalapao says that during a bull run, most of the hiring comes from existing companies, many of which were previously on a hiring freeze. And only later in the cycle do new firms enter the market for qualified talent. All eyes turn to Ethereum this week as investigative journalist James O'Keefe posted on X a detailed synopsis with the headline, "Exposing the Crypto Mafia Part 1, Ethereum." The post is accompanied by a detailed 17-minute video laying out the story of how Steven Narioff, who claims that he was a co-creator of Ethereum, declined a multi-billion-dollar payout in Ether in order to prevent any conflicts of interest for the good of the project. After a winding path of conversations and events, he was arrested and interrogated about major players in the crypto world. When the government declined to prosecute Narioff after his arrest, many in the crypto community believed that he was targeted in an attempt to capture and influence other crypto leaders. Well, this just scratches the surface. Links to O'Keefe's post and video can be found in the description. Ripple has announced that it will launch a US dollar-pegged stablecoin to compete with Circle and Tether over the next 5 years. While the current stablecoin market is valued at around $150 billion, Chief Tech Officer David Schwartz thinks there's room for another player, saying, quote, "We think it will be over $2 trillion by 2028, and there's only 2 market leaders. We don't think it's a winner-take-all ecosystem." The new token will be pegged 1-to-1 with the US dollar and be backed by US dollar deposits, short-term treasuries, and other cash equivalents. It will be issued initially on the XRP Ledger and Ethereum blockchain. That's it for this week's Bitcoin News Update. See you next week.